Hello, and welcome to today's episode of the Daily Blend. I'm your host, AC, and we are joined in studio today by Alex LaBrunerie, the CEO and president of LaBrunerie Financial. How are you, Alex?
Very well, thank you. Enjoying the summer.
Yes, summer is nice, isn't it?
Yeah.
Minus the mosquitoes.
Minus the mosquitoes, yes.
Minus the mosquitoes. We talked about that.
Yeah.
They could go away,
Yes.
and then summer would be great.
That's right.
Summer
Would not
would be
miss
great.
them.
No, not at all. Not at all. So tell us what's going on in the financial world.
Well, we're a little bit past halfway through the year, and the stock market has been a roller coaster ride. And right now we're on the upside of the roller coaster. In April, we were down significantly, and all of this, of course, has to do with the tariff regimes that the United States government is enacting or trying to enact. So in April, the Standard & Poor's 500 index was down almost minus 10% at its low point, and it may change by the time this recording is aired,
True.
but as of this week in July, the index is up almost 9% or so, depending on which one you count. So you've got almost a 20 to 24% swing in value, which is significant. That's a quarter. So it's like it's like watching your money drop and then watching it come back and maybe gain a little bit. So we're going to live through this volatile time because these tariffs are not going to go away anytime soon. So I think we really need to steel ourselves and just get ready for the long term and not make emotional, rash decisions and look, in the distance. So if your time frame is 10 plus years till retirement or 10 plus years towards before education funding for your children, then maybe try to just hold on like a roller coaster at Worlds of Fun.
Yeah, because that's what you have to do, right?
Yeah.
You have to hold on.
Yeah.
And it's interesting because I'm listening to you say essentially the same thing you said when it was down.
Yes.
You're saying the same thing when it's up.
Yes.
So what you're saying is just hold on and look in the long run. Don't panic either way.
Yes.
Right? Don't get too high or too low.
That's
Just
right.
hold on.
It's really controlling the emotions. There's a whole field of study that finance professors have now that's come out in the last 30 years called behavioral finance, which is how, a lot of people say the markets are rational and everything that's known is priced into it. That's sort of called the efficient market theory and that's a lot of proof to that's true. However, as humans, we are emotional beings, so you lose a quarter of your life savings on paper. That's not fun.
No.
And so you tend to make emotional decisions. So you really need to focus long term, and keep on that.
All right.
So
that's our takeaway.
That's our takeaway,
Focus long
and
term.
it's not going to change anytime soon because this tariff acts are real. They're not going to go away. So it's a lot of unknowns.
All right. So hang in there for the long term.
Yes.
Hang in there for the long term.
But on the and if with the turn of I don't want to rush through the summer because we love the summer, but it'll be autumn time soon enough, and that's when you're my age, you know how fast time goes. So not to jump ahead, but by October or so, people who are making required minimum distributions from their IRAs and their retirement accounts because they're over age 73, this is a good time to look at doing qualified charitable donations. Maybe if you feel like you have an abundance of income and want to donate to one of the great charities that you support, now is probably the time to talk to your IRA provider or your investment advisor or your accountant and say, how can I do a qualified charitable donation if I haven't done it yet? And you can do them small amounts, like $200 if on up to thousands. And what happens, AC, is the IRA, let's just say it's with company X, like a Fidelity or a Charles Schwab, with your approval, they will send a check directly to the charity of your choice.
Yes.
And you will not be taxed on that money.
Yeah.
Whereas if you take it as a required minimum distribution, you will pay Uncle Sam and the state.
Yes.
Most people pay the state, but certainly Uncle Sam's going to be waiting to get some tax on that. So it's a great chance to support these charities that may be in need. There's a lot of people that are in need in a constant state in our society.
Yeah,
so
very
this is a
true.
way to do that.
And that's a really great way to do it. If you're going to do it through one of those avenues, then you're not taxed on it.
That's right. Mm-hmm. That's right. But you have to be, over 70 and a half. And so it's not for everyone. The new tax law that they passed just this month, I think a week or so ago, does have some methods for people younger than 70 to make more donations. But with a lot of these tax laws, they're so unruly, and it's very difficult to know. The ink's not even dry on it, so it's unruly to what really are the benefits or the cons on the charitable donations that have changed. So you really got to wait to end of the year
to see
till accountants have been able to look through the hundreds of pages.
We got to let the accountants figure it out
That's
first.
right. Let the accountants figure it out. It's a good, and tell us and guide us.
That sounds like a very smart idea.
Yes.
Let the accountants figure it out first, and they can tell you guys, you can tell us.
That's right.
Kind of how that works instead of us jumping in there trying to figure it out ourselves, because I have no clue.
And I can tell you, yes, and it'll change.
I'm sure.
So
I'm sure it will. It will. So if people want to find you guys,
yes, we're at LaBrunerie.com. We're here in town at 573-449-5313.
Okay. All right. And you guys are
Happy
there to
summer.
Help people with all their financial needs and goals.
Financial planning, wealth management, saving for investment.
Yeah. All the good stuff.
Yes.
All the good stuff. All right. Well, continue to enjoy your summer, Alex.
Thank you.
And we will see you back here next time.
Thank you.